Well, we're back with you to take a look at your grain trade in this particular segment. I'm Marlin Bohling. Welcome back, and we are going to take a look at our overnight export sales that USDA reported before we came in this morning. And they were fairly sizable. Let's take a closer look at what they actually reported. We had two sales of soybeans overnight. And so the one was in the amount of 198,000 tons. It went to China. And they had another sale reported of 121,000 tons. That was to the proverbial unknown destinations. And on top of that, we had one for soy products. This time it was soybean oil. You don't hear about that often. 20,000 metric tons of soy oil reported sold to unknown destinations. So you had three in the soybean category anyway that were reported sold overnight by USDA. Did it help? Well, let's take a look. We'll go through the commodities starting with the corn. We'll get to the beans here in a second. On the corn market right now, you have the May contract $0.015 lower at 3.84 3/4. December down a penny at 4.03 3/4. And on the soybean side, on the soybeans, we have the May contract now just fractionally lower. We're down 3/4 at 10.67 1/4. It's had an extremely wide range of about, well, it looks like about 19 cents today. We have July down a penny and a quarter at 10.75 1/4. So almost even now in the soybean trade. On the wheat market, we've had big gains in wheat for a couple of days, and now they're taking a lot of that back. May Chicago wheat down 18 at 4.97 1/2. Meanwhile, in Kansas City wheat, we have the May contract down 13 3/4 at 5.29 3/4. Minneapolis wheat on the May contract is now trading at 6.23 1/2. That's down 11 1/4. And on the cotton, cotton has been mixed this morning. So we have May down 7 points at 81.74, but new crop December down 4 points at 77.14. In the middle, you have the July back to unchanged at 82.11. Let's go to the trading floor in Chicago and find out what's going on direct from the source and talk with our regular contributor. It is Mr. Scott Gecas with Long Leaf Trading. There he is. How you doing, Scott?
Good, thanks for having me.
So is this strictly a day of profit taking? What are they talking about on the floor today behind you there?
Yeah, especially with the soybean market, everything is all focused on the comments coming out of the U.S. with the tariffs. I've been talking about the tariffs coming on in effect for the last few weeks, if not more than a month. I'm really surprised that you're seeing this strong move in soybeans, just in grains across the board. With China having a very direct effect with these tariffs, the rumor was they were going to go after the soybean product first. We've seen this big, strong move all the way with the soybean market. Today they came in much higher. They're starting to pull back. So I don't know if this is actually profit taking or if these tariffs are actually starting to play out in effect. But, with the soybean market, 10.80 is a big level. If we break that, we got room to run all the way up to the highs back in, 2016 in June, all the way up to like around 1,200 or so. So we're going to see how that plays out.
I've heard of a lot of talk about possible retaliation by China against the USI commodities like soybeans. They're a big buyer of soybeans, of course, buy quite a bit of corn too. But then on the other hand, I've heard some analysts talking about the fact that China has really exponentially increased their debt over the past few years, and they can't afford to lose us as a trading partner either. What do you think about that idea?
Right. Well, right now, everything's a rumor. Doesn't really, you're seeing rumors coming all the way across from, are they going to retaliate with soybeans? Are they going to retaliate with the policies with North Korea? Are they going to retaliate just, decreasing their interest in U.S. bonds? So until any of that, comes through fruition, right now it's just all hearsay. It's all, rumors, speculation. Either way, though, it's a great time to be an option trader because volatility is through the roof. All
right. Is weather trumping everything right now? Otherwise?
Yeah. The dry weather across the board is driving all the markets, especially with the wheat market. I was on Wednesday talking about the wheat market testing that 500 level. It didn't even test it. It just blew right through it.
Right.
So, we're going to see how all that plays out.
Okay. Scott, we'll come back in a moment, and I want to get your thoughts on what we're seeing developing in our livestock trade as we head toward the weekend. Scott Gecas is our guest. We'll be right back. We are talking with Scott Gecas. He is with a company called Longleaf Trading in Chicago, and he joins us direct from the trading floor right now. Well, we talked about the grain side. I want to visit with you about what's going on the livestock sector, where we've had some technical selling this week. We have some brand new numbers out here this morning, Scott. It's the wholesale beef and pork numbers. Let's take a look here at the beef cutouts from mid-morning. Here we have a split decision today as we have our Friday numbers coming in. Choice now 46 cents higher this morning at 222.76 per hundredweight. On the other hand, you had selects going the other way, down $1.02 at 214.58. So now the spread is back out to $8.18 between those two. Meanwhile, if you look at the pork carcass cutout values and related primal cuts this morning, we have the carcass value at 78.35. That's now up 97 cents. We have the loin value gaining $3.81 this morning. The hams are down about 20 cents. The belly market, which has had some just tremendous big swings here this past week, either up or down. Belly's right now down 36 cents at 120.40 per hundredweight. If we look at our futures, we'll take a quick look here at live cattle and feeders. Right now on the live cattle trade, we are down 57 cents on April at 122.75. June down 48 at 115.02. If you take a look at the feeder cattle trade, on the feeders, we have the March down 90 at 144.15 and April down 77 at 145.98. On the cattle side of the equation here, Scott, what do you make of the action that you're seeing here on a Friday? Because it has been on both sides of unchanged here.
Yeah, with the cattle market in particular, it's all due to supply concerns. You're seeing a lot of heavy selling pressure coming in because of that. You know, on a technical side with the cattle, it needs to hold 122. If it doesn't hold 122, you're going to see a very sharp spike in volatility as well as selling pressure. We could test all the way down to 116.
Really? Okay. Now on the feeders, let's pull up the feeder cattle prices here once again, if we could, on the screen for our viewers at home. And on the feeders, we have the March at 144.15. And you have the May at 147. So the spread not that great between there. I noticed between May and the August month, summer month there, it jumps up to 151 there on that spread. Do you see much changing in the potential between the spread on those?
Not right now. As far as everything moving forward as is, I mean, I don't see that spread widening too much.
You don't?
So we're going to see how this is all going to be playing out. You know, the one thing I do want to touch a little bit on is, you know, the supply concerns that are there, but so is the demand. Demand's always been there right now. Now, you're seeing a lot of people that are still working. You know, the jobless claims came out yesterday, and they've been the best on record since 1969. So the demand's still there. People are still paying up for, you know, the beef prices at the market and stuff like that. So, you know, we got to find a balance between the supply and demand.
And I did hear carcass weights on the beef side were lighter this week. That was kind of a surprise to some folks how much they were down. On the lean hog trade, let's take a look at our futures board. And on the lean hog trade in Chicago right now, we have April 44 higher at 67.42. Meanwhile, we have the May contract now 27 lower at 74.28. And you have the June coming in there at 79.82. It did get up as high as 80.65, but it's back under 80 bucks right now. That would put it about 26 cents lower on the day as that trend continues here the last half of this week. Thanks for the info, Scott. Good to visit with you. We'll talk to you again soon. All right.
All right.
Have a great weekend. Scott Gecas of Longleaf Trading in Chicago. Janet, back to you.
All right. Thank you very much, Marlin.